Hi traders, welcome to Admiral Markets live webinar. My name is Chris. We're going to take a look at strategy. Today's focus is on strategy with the candlestick and Fibonacci patterns at support or resistance. First of all, though, be aware that this webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more information and details. Please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar and video, you agree with this disclaimer and you agree with the risk involved and you are aware of the risk involved, when trading. Alrighty, so we're going to kick off the webinar, take a look at some very interesting candlestick patterns, I think, and fib patterns as well that have occurred over the day, and we discussed to some degree yesterday some of these things as well. So for instance, the euro yen, for instance, the euro dollar. Just out of curiosity, did anyone take some trades that today, based on maybe yesterday, for instance, or not? Just let me know. I'm curious what instruments or currency pairs you are looking at this moment. Feel free to use the chat to ask questions, to share your screenshots, to share your analysis, and ask anything regarding, of course, what we're discussing here in this webinar. Especially if you're new, by any chance, feel free to reach out. Before we dive into the live charts, though, please note that for more webinars, if you're looking at this video, you can find more webinars by going to admiralmarkets.com, first of all, education, then Forex and CFD webinars. You'll see quite a decent list here of webinars throughout the week from Monday till Thursday, each day, Monday, Tuesday, Wednesday, Thursday. And tomorrow, for instance, we'll be taking a look at, on Thursday, price movements and trends of financial markets in the second half of 2017. And if by any chance you miss any webinar, you can always check out the Admiral Markets YouTube channel, and all of these webinars are uploaded there. You can always see it. Typically, within 12 hours, you'll be able to find it, for sure within a day, and then you can see it with, a bit of delay, but you'll be able to see everything again, or for the first time. For more information, by the way, besides webinars, we have, of course, here articles, courses, analytics. So there's a lot to discover with Admiral Markets, besides, of course, the trading access. So I hope that you will check that out. All right, let's take a look at the euro dollar daily chart. And the euro dollar was indeed the big day that it promised to be yesterday. Price broke 3 pips above 113 when we were looking at the charts live, but ultimately it went further than that. It closed all the way with a high at 113, very near 113.50, and the close itself was only off 12 pips. So I was saying if that's within 30%, then if the close is within 30% of the high, this candle is a good breakout candle. With the close above 113 would be great. We got both things because if you look at the high and the low, the candle itself has a size of 170. So if you divide 12 by 170, well, what do you get? Well, very simply, in fact, you get, I don't have my drawing to open. Sorry about that. But basically, it's less than 10%, right? Because 10% is 17 pips. 12 is less than that. So quick math explains to us that 12 pips is about a little bit more than 5%, is about 6 or 7%. So that's great. That's a great breakout candle, in fact. All right, and this is what I wanted to do. 12 divided by 170, right? So 17 is 10%, 8.5 is 5%. So it is somewhere around, we can have a calculator, it would be faster maybe, but you get the point. It's about 7%, I believe. So that was the trigger. This is the candlestick pattern, basically, at resistance that we were talking about yesterday, the 113 resistance. So this is a great example for the strategy webinar of today. Where do fibs come in? Well, basically, when you have a breakout candle like this, or if you have a reversal candle at strong support or resistance, this is basically indicating that price is either going to reverse or it's either going to continue with the trend. So then we can put a fib on the initial reversal or the initial breakout. One way could be, for instance, as discussed yesterday, is to put a fib on the daily candle, all right, and wait for a retracement to the 23, 38, or 50 fib. In this case, it kind of almost went to the 38, just missed it by a few pips there. Today's initial low so far is 112.90, and the fib itself apparently at 112.82. So that could have been a retracement that would have been possible to trade. 113, of course, was the broken resistance level as well. So that could have been another factor to consider when trading the bounce. 113, broken resistance becoming support. Did anyone trade this euro dollar by any chance? We discussed it in yesterday's live webinar. If you have a pending order, you could have taken it already right at the turn. If you're waiting for a candlestick pattern at the fibs, right, then it's a different story. In that case, on the hourly chart, we don't have a great signal. This is a wick. Could have been taken right there with an entry like this, and that trade is up a few pips. So far, price has not really gone all too far considering, considering the strength of this momentum, basically. We can see that if we put the fib on the entire swing rather than yesterday's candle, we see that the price did retrace to the 38/50 area. And in this case, we're waiting for price to break the top to get to the minus 272 target. So that's still remaining. Let's see if it gets there. If anyone took the trade around here, I think break even is fine. If you took it a bit higher, I think maybe it makes sense too, but it's a bit early. It could still make sense to keep the stop loss below this bottom. Both are possible, depends on your risk adverseness, basically. How risk adverse are you? This is still bullish momentum, so I do think that the trend is not shaky. There's no doubt about that. The trend is up, and I think there's a good bullish power and momentum, and I think that this will continue. The question is when, but I think it's pretty likely that this is the good momentum, pullback continuation. Now is not a good time to trade it, in my view, because price has reached the top, and that's not something I'm interested in. If price, however, on a 50-minute chart, no, not at this moment. Really, the retracement was the best trade after the momentum. Now I don't see anything that interesting at this point, really. The other interesting was the cable, of course, stopping at the target. So anyone trying to, basically yesterday's candle, pretty much similar, but a little bit of wick. Let's take a look at that candle. 145 pips. The close was 48. So that's just a bit more than 30%. That candle is okay. Not great. Just barely qualifies as okay. So here too, a fib could have been put on the candle, although the retracement was very weak today. But more importantly, on the hourly chart, perhaps you were managing to take this breakout to the upside. If not, I understand, because there was not really a great breakout candle. If you took the fractal break itself, then you would have had more success. But this is a bit difficult one. Maybe the engulfing twin was the best one, in fact, earlier in the morning. All right, that could have been a continuation to the upside. If you looked at my wave analysis, I did mark this as a wave 3 and 4 earlier this morning, so perhaps that could have helped you with catching any potential wave 5 that did occur. But if not, then maybe you took the euro-yen that we discussed yesterday. Euro-yen, the candlesticks we saw yesterday were very strong. Take a look at this. Strong candles indicating large momentum. And we were analyzing yesterday that the euro-yen seemed like the best one for an upside continuation after a bull flag retracement had occurred. One of the reasons was because this is trending. Look at the price above Keltner, which is a MT4 Supreme Edition tool specifically for Admiral Markets. 60 extra features with the MT4 Supreme. And it stayed and right basically just above it. That was strong momentum. That's why I was overemphasizing that after, in my view, after a correction, there would be one more upside at least, if not more, if not two, at least one. Wait for the 15-minute flag to occur. So in this case, candles were showing momentum, and we didn't have we didn't have a Fibonacci pattern maybe on the euro yen, because it just basically just showed so much momentum that it didn't even retrace to the 23.6 fib. Look at that. That's how much momentum was available in that market. In the meantime, it did though. In the meantime, after reaching the 127.75 target, it did fall back to the 38.2 fib and bounced again. All right, so my trade was after the break. You can see this is the trade I took, plus 49 pips. You can see it marked here as an example trade. The example trade I took, about 2-to-1 reward to risk, plus minus. And I took it on this particular candle, as you can see, on a 50-minute chart, because this is a 50-minute triangle in my view, the 50-minute break, and I took it at my Wiz target level. For those that don't know Wiz, those are targets based on Fibonacci sequence levels, which was a pretty accurate target because in the meantime, price hooked back, corrected, hooked back, corrected, and then made an upside and is still going nowhere but sideways, basically. So pretty much optimal exit, I guess, within a few pips of the very best level that one could get. So very happy with that. And you can see with the exit, I mean, and okay number of pips, nothing wrong with it, 49. But the exit was sweet because there was really no chance for it to go higher. You can see, obviously, 5 to 6 candles is my timing rule that I've used many times. For those that joined this webinar, you know about that. So if you're not sure whether this is a good exit point, you could use that timing rule. 1, 2, third candle, fourth candle, fifth candle, sixth candle. Anyone seeing the sixth candle bearish and the fifth too with wicks on that could have exited there for less profit, but still the opportunity price could have gone higher, but didn't. So that could have been another way to do that. Regarding the fibs, I think that a fib on this daily candle probably still very strong. Any entry at this 38.2 fib with a stop loss below the low probably would do pretty well. So far, doing fine at this moment. Now, yet again, the structure kind of looks similar on many of these currency pairs. In fact, I mean, if you look at let's take a quick look then. The pound yen, you'll see move to the upside. We will see the pound odd move to the upside. We will see the euro odd move to the upside. We will see the euro New Zealand, that was the second favorite, do the same thing basically. Bull flag right here, and break of the bull flag, and then a hook back towards a fib. As you see here, we didn't have a hook back to the fib, but if you put it to the very top, we did. So similar structure, strong momentum, shallow pullback, continuation, and then a deeper move down to the fib. So those that maybe are not using fibs that much, or not trading the structure perhaps so much, you might get tempted to, let's say, trade this fall right here, use this as a support, put the stop loss just below it, and then get stopped out, for instance, right? So not a bad trade idea, just the wrong timing, too late or too soon, really. Too late, because this was the real breakout of the small bull flag. Sorry about that. And too early, because the retracement after that went deeper. So you can see how timing is important. All right, this was the correction I talked about yesterday after momentum. This was the pullback. This is probably going to be break pullback continuation. Some pairs will do that better than others. I liked Euro Yen and Euro New Zealand yesterday, and you can see that that worked out fine, although in all honesty, all of them pretty much went into that direction. USD, I talked about bearishness. If there's a good wick, the wick did occur, but there's no bearishness to be seen. I did also talk about the break below the pivot point, if I remember, which did not occur as yet. Not interested in the Aussie at this moment. And the dollar yen basically reached 112.50 and stopped right there. So that's either a reversal or just a correction for more upside. At the moment, the dollar yen is kind of consolidating, though. So it does not seem that particularly interesting at this moment, unless it breaks above 112.50, or if it were to break below 111.80, that might change things for up or downside. But for the moment, it seems to be quite indecisive. So that's how you can combine candlesticks, daily candles, put a fib on that, wait for price to retrace it. You know, candlesticks at support or resistance will give us a lot of information, like the euro dollar daily chart. I'm stumbling over the words here. Basically, this is a good breakout candle with the candle close near the high, candle close above the 113 resistance. It is a classical candlestick pattern that is breaking through resistance, and after that candle kind of confirms the breakout, price returns to the fib, and we see a classical pattern and basically classical break bounce, break pullback, I should say, continuation, and the pullback occurs and goes back to the fib. So that was kind of a recap of the market that we're discussing and the things we were looking at now. I think that considering the momentum on many of these pairs, I do think there should be more continuation at these fibs, not necessarily at the 38. Some of these pairs could retrace deeper to the 50, for instance. I don't think the euro yen will do that, but some of these pairs could, like the euro odd, for instance, could see that. It might be a bit weaker. Let's take a look at the odd yen. I think we have it ready. No, that's the New Zealand yen. 1 second. Can't find it at the moment. Sorry about that. It's somewhere. I'm just missing it. Wait, maybe I'll just... there we go. And should see it somewhere. Here we go. All right, there we go. Odd yen moving higher indeed. Odd stronger. Aussie stronger than the yen. Oh, I'm not sure which one I got rid of now. I think that's the euro odd by accident. That was not the meaning. So Aussie in any case a bit stronger. Let me get back to the euro odd too. Let me re-add that quickly. Hang on, folks. There we go. So with that said, the odd is stronger. So euro odd, let's take a look at the euro odd now, is moving up compared to euro yen. And Aussie is a bit stronger, which means that euro yen is looking a bit better. All right. Would you be able to see or know whether the next day is an inside day? I think you mean today's candle, right? CT, not tomorrow's candle. You could make an estimate about that just based on the price action structure. Predict the next day. It is, I think, you could work with statistics about that. So I think there's something that can be done with that, but I don't. I don't work with necessarily predicting what the pattern of the candle will be the next day. But I have sometimes when it's the right moment, when I want to analyze it, that I try to understand what candle could be today after a few hours or some price action on lower time frames to try to guess what today's candle could be. Tomorrow, not really, but I think it could be. If you collect data, it could be um, some possibilities there. But I don't do that myself. So far, gold has been pushing up slowly. It is challenging this trend line, but has not broken it yet, in my view. The upside has not failed yet. I mean, I think price was here when we looked at this chart, somewhere here. It didn't break below S1, it did bounce, and it's now retesting the pivot point, but it hasn't broken above the weekly pivot point either. So it's kind of stuck between those levels. I think it needs to break above the weekly pivot point or below the S1 before there could be some potential there of a breakout. And it could be good to keep an eye on the 4-hour candlesticks as it breaks out, and probably look for fib patterns after the break, pullback continuation, break, pullback continuation. So within this kind of analysis, it's important to know candles, what information they provide, the candlestick patterns, what the fib is, and using support and resistance. All right. One of the pairs I also was interested in is dollar CAD, especially after this break like this, but it didn't pull back yet. I was looking for an hourly pullback more than these things here, more like a flag kind of formation. I actually was hoping that this could be it, could be the start, but it actually broke to the downside rather than making a kind of a flag like this. This is what I was looking for on the dollar CAD. I do think though that with this strength of momentum, an hourly bear flag will occur, and I think there could be a good breakout to the downside. So that could be occurring on the dollar CAD. Other pairs, New Zealand seems to be finding some resistance with this candle. DAX slowly moving a bit lower, but the American stock indices still pushing higher. Some indecision candles here, but nonetheless, higher highs, higher lows mostly. Except this week already has a lower low, but still pushing strongly, in fact. Oil has broken through support, fallen down to the 38.2 fib. Could be using that as support. Is already doing that right now. But generally speaking, this could be just a pullback for one more push down to the 50 fib at close to 40, just below 40. Sometimes I do enter the market with pending order, but it is more exception than the rule. I do like to wait for candlestick patterns. So the trade I liked the most today was the euro yen, because it's basically showed a lot of momentum and then continued after the break very nicely. So I like this type of trade more, this one, than pending orders typically. Sometimes I do it because there's this good confluence, and basically, generally speaking, I just think that there's more confirmation when we have price action confirming a reaction to a retracement, to a breakout, etc. Whereas with a pending order, it's a bit tricky. I mean, if it's a very strong support level or resistance, strong confluence, if there is a a ton of reasons why we should trade it. Structure is good. There's a trend. There's patterns involved, and you kind of have a lot of building blocks and support thingies that kind of say, okay, this is a good trade, then yes. But I'm not a big fan of just taking market orders at any spot, because I then lose the ability to kind of, I can always delete the pending order, don't get me wrong, but typically you might miss that, you could miss that moment. And who knows how price is looking like when it arrives at my pending order. There could be huge momentum and I'd rather wait. So I tend to try to gather as much information as I can before making a decision. The pending order kind of removes that step in a way. You could, of course, change the pending order. You could still cancel it. But it does remove it a bit because you already have done your analysis, so you have the order there. That's it in a way. Most of us treat it that way. Whereas I still like to keep an eye on the market. I still like to use all the info that's available. If I have a pending order here and the market moves away 48 candles, then that pending order is based on information that was valid 48 candles ago or 24 candles or 5 candles ago, but I don't incorporate that new information. So that's why I like market orders more. But certain cases, definitely. I mean, with the euro dollar, we didn't talk about it yesterday, so this is in retrospect and hindsight, full clarity here, but could be one to think about, right? 113 is a major level, really, really, really major, right? Once again, we didn't discuss it yesterday, but could it have been used for a pending order? Well, if you have to choose one candidate, I think that's a pretty strong one, right? It really had a lot of merits to it. Anyone using that, I think, really, made sense. I didn't do that, but this is one of the examples that I definitely could have seen myself using. If there's strong fibs, strong levels, yes, makes sense. So from this perspective, 113, yes, good level. 113.02, for instance, could have been a good example. Why do I see oil going down, not reversing? Let's take a look. Basically, it's basically, it could be both, in fact. Let's take a look at this. 13, 18. The wave C could, if this is an ABC correction, well, this could be a wave 5 too. So let's be conservative and put the fib like this. In this case, price missed the fib a bit. Could be a 50 bounce. Well, if today's candle is bullish like this, I would probably agree with Z10 with you that there's probably going to be a good rally. What I would expect is if today's candle is bullish, that's already the 5th candle. So far, the trend was down. Therefore, I was expecting price just to continue with the trend. That's the reason. But if today's candle, tomorrow's candle, bullish, not very bearish, then I think we might see this. We might see price make complete this swing, make a pullback, and then continue. Whether this is a 1, 2, 3 or an ABC remains to be seen. But both wave 2 and B would indicate the bounce at these fibs. So I think that is a decent probability. We were in a downtrend, but we also broke above this downtrend, and momentum is picking up steam. So from this perspective, if we have a good daily candle close today, I think that true, this could see this movement. And then we'll have to see how price responds to these targets and these resistances, whether price still, in fact, is expanding the correction like this, or whether it is actually starting a new uptrend. For that particular equation, I think 46.40 is very important at this moment, at least. It depends on where this fib will be placed. At this moment, this is the fib. It depends on where the daily candle today closes. The high where the high is, whether this swing stays intact. For the moment, the minus 61.8 is 46.40. If it stays at or below the 46.40 minus 61.8 target, it could be an ABC. If it breaks above it, then it's a higher chance that it could be a 1, 2, 3 instead. No, I don't use fib extensions. I use the retracement tool and I add targets to it so that I have retracements and targets in one tool. I don't have to add tools. It saves me time simply, and I have all of that in one handy overview. But to get targets, I need to use minus levels so that I have basically the swing, retracement, and then targets above in upside and below for bearish targets. All right, so we went through most of what I wanted to discuss. Just an extra kind of few minutes here before we wrap it up on candlesticks and how you can read the break or bounce. We've talked about this before, so if you have questions, feel free. If this is not so interesting for you, of course, no problem. And hope to see you in next webinars with Admin Markets tomorrow, next week. By the way, if you're interested in trading with Admin Markets, you can find out through Start Trading. You can find out the conditions, account types, and all of the information regarding the regulations and stuff like that, of course, as well. Regarding candlesticks, though, I wanted to dive into a bit more about that. I think that we don't necessarily need to have patterns to have valuable information from candles. We can just look at the candle itself. A few things that I look at are candle size, candle close, and the wick, and also the sequence of candles, of course. That's, in a way, patterns, in some cases, patterns or swings. And basically the body. How does it look structurally? Are we looking at, for instance, a small indecisive candle like this? Or are we looking at a strong breakout candle with a good sized candle, close, nadir low, and pretty good bearish continuation candle? These candles basically are a ton of value. I couldn't underestimate or overestimate or overstate their importance for trading, for my trading at least. I think for many traders. Indicators, tools are all great, but ultimately the best way I think to follow price is by looking at candles. The tools that I use, the analysis that I use, makes me understand the market structure, waves, fibs, tops and bottoms, patterns, trends. I understand what's going on because of it, and I have a rough idea which way I want to trade it and from where, which decision zones are critical, what does the market structure look like, and how do I want to trade it once price gets to the decision zone. But the candles really are confirmation. They confirm breaks, bounces, entries, reactions. They allow me to follow the market rather than me leading the market. What I mean with that is that instead of me guessing what the market will do and hoping that the market will follow my lead, will follow what I think it will do, I make my analysis and I wait for price to confirm what I was thinking would happen. When that happens, I take the entry. Now, some critics say that waiting for price to respond is too late for an entry. And partially that sometimes happens, and that can happen. That is true. That's why I use multiple time frame analysis, because I look at the structure of the market on higher time frames. I myself use daily and 4 hour, but then I use the entry on the hourly chart. And because then I look at spaces that are available on higher time frames like 4 hour and daily, the reaction on the hourly chart does not eat up too much of that space that I think is available. So from that perspective, the confirmation, I think, does not kind of hinder to trade. Sometimes it could. Sometimes you get huge 1 hour candles. I'm not saying it's impossible, but I think the benefit outweighs this disadvantage. But then again, everyone has their own style. Don't get me wrong. And people who want to trade with pending orders, let's say, generally speaking, or market orders, but without the confirmation, fine, right? This is the way I do it, and this is the way I prefer. And I think that it is, from my perspective, very nicely in sync with the market and how it moves, because we get more information from it and we get more kind of read on what price wants to do. So it allows me to follow price action and its behavior. We have Z10 asking about these particular candles. I'll dive into that in just a second. I just want to finish this point that with candles you have so much information. So for instance, let's take a look at the hourly chart. That's more of a reaction entry chart, for instance. So simply, for instance, here, right, this breakout of this flag, this candle, perfect, right? The next candle, well, that is a pretty sizable candle. So yes, waiting for a breakout would have been a bit late in that case. True. So you can see the double kind of edged sword, sometimes good, sometimes maybe not optimal. An entry here, though, still would have seen after the flag, another flag continuation. So it depends. This candle is pretty nice, right? Pretty good breakout candle right there, and a continuation. The next one, not so good, right? So got to find that balance. What is the breakout? Finding a good candle is important here too. Good candle, that's pretty optimal, that candle, I think. Bounces, here you see good bounce at resistance at the trend line and indicating the downside after that, right? Let's take a look at the example that Z10 wanted to look at, which was on the daily chart. All right. So Z10 was talking about these candles and the fact that they didn't bounce, that expected the price to go up. So let's take a look at those candles. Oh. I hit the wrong button here. Let's see. Yeah, here. Sorry. Let's take a look at those candles. Yeah. So bearish candles. Let's take a look at the sequence as well. Then we have more or less a doji with a small bullish candle, a wick on top with a bearish close, and then we have a doji, although a wick at the bottom. These are not necessarily strong reversal candles. Yes, one could think, especially with this candle, of course. So I definitely see your point, and I definitely understand why you're thinking about that. You could, of course, understand that these might provide some kind of bounce, especially the second one with the wick, I would say, right here. Yes, so that's possible. And I think that in a way there's nothing wrong with that, and that could be just a bit unlucky that price continued lower. Then again, is it the optimal candle? No, because in my view at least, if I'm looking for reversal candlestick patterns, it would be good not to have dojis. I consider these to be more indecision candles than really reactions. If it would have to have a bullish candle like this, right, that would definitely change the character a bit, would make it more interesting. I know it's a small difference, but still something that I consider still valuable. If you have any doubts about a particular candle, you can always wait for the next one. So if you're doubting about this one, wait for the next one, which is not a confirmation. If you're doubting about this one, wait for the next one, which is not a confirmation. Both next candles, bearish, in fact, and some wick on the top. This is a tricky one. I'm not saying it's an easy one to avoid, considering the fact that the bigger structure might lean towards a bounce area in this zone. So there's definitely some merit to be said about that particular idea. Don't get me wrong. You can look at lower time frames. That might help too. For instance, if you think that, let's take a look at this area. But these candlesticks, I think that, yes, I see your point, and that there is some reason for that. But ultimately, the combination as well, when you look at the combinations of those, not really strong pattern, in my view. So yeah, it's a bit of a mix maybe. But I see your point though. Don't get me wrong. Let's take a look at this on lower time frames. If I can find it here. There we go. And we have more or less lower lows all the time. Looks pretty mild, pretty corrective on this time frame. So not all situations, of course, these candles will have value. The candles, generally speaking, especially daily candles, weekly candles, monthly candles, will have some value almost all the time. 4-hour candles, mostly 2, 1 hour, sometimes 15, occasionally, right? It becomes less valuable as we go down the hierarchy. Generally speaking, all these daily candles do have some value, but some candles will have more value than others. That does depend on decision zones. So if it is at a strong level of confidence, those reactions will have more information, more value than if price is not a decision zone. But in any case, those candles will have value. And if you can see here, for instance, bullish candle, bullish candle, bullish candle, bullish, inside candle, bullish. This could be a reversal candle, but it didn't turn out to be bullish, 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 bearish, indecision, bearish, bearish. So you can see just by looking at the character of the candle, you get much information about whether it's bullish, whether it's bearish, or reversing. There's one false one. Really, what I would consider false is this one. That could be one that is throwing us off the rails and could be difficult to trade, could be difficult to avoid to trade perhaps even. It looks very much like a pin bar. And that's when I think decision zones come into play. Is it a key level there? Is there a reason for price to turn, or is it just exhaustion? That's why analyzing, looking at the market structure is important, because sometimes these particular signals will not provide the reversal or bounce that you think could happen. Will placing indicators help? Yeah, I think some indicators could help. Let's take a look at some. Let's see. Perhaps the parabolic, for instance. Parabolic 4 did not get broken. Two neither. Moving average, perhaps. Oh, that's a bit too long term. There we go. Where were we? Let's see. We're looking at here. So also no reaction there. No break above the moving average, for instance. This is just some examples you could use. HMA, the short term, didn't move either, stayed bearish. So that can give some idea that this is not really the bullish reaction that you might expect. It doesn't confirm enough. It doesn't show enough kind of pace in its reversal. So those, could be things that to think about. But I think in this case, there could be reasons to consider that. I think probably zooming into lower time frames made the most sense because before you wait for a reaction at support, price could be all the way here and eat up half the space. That's why I'm not a big fan of confirmations on the same time frame as you're analyzing. Because then indeed it's a bit late. That's why it could be good to look at the 4-hour, 1-hour chart to see if there's some particular setup that could make sense for upside in this zone. Although that probably would not have worked well if something was available there. All right, folks. So candlesticks, in any case, provide a lot of information. Not always perfect, not always going to work, but yes, breakouts, bounces, they kind of give that final decisive edge, let me say it this way, they give kind of that final push in the way I'm thinking or the way I'm looking at, and help with the direction, the entries, filters, staying out of trades, and just kind of connect the analysis to actual trading decisions. Let's see. Can we make candle analysis of next rally, May 5? Sure. So basically, when you have a series of these candles and you have a candle like that, that's a pin bar. That's actually a candlestick pattern. So that's not only a candle, but it's actually a pattern. For the pattern to be successful, which is a different kind of patterns are again a different story, but for the pattern to be successful, we need a series of candles in one direction, then a candle to be opposite of that, candle close near the high, candle close to be in the opposite direction, and a big wick at the bottom for a bullish reversal. Big wick at the top for bearish reversal. So perfect candlestick pattern, perfect bullish pin bar. So this candle itself is worth the entry in my view. If you're looking for confirmation, one could put a fib on that pin bar, wait for price to go to the fib, for instance, bounce at these fibs. One could even look at the hourly chart, look for a bounce at these fibs, and try to trade the breakout. All right, so we got two indecision candles, a good follow-up candle, another follow-up candle, indecision, standard follow-up candle, but nothing spectacular, nothing to trade necessarily, inside candle, inside candle, inside candle, breakout. Nothing really major unless you get to maybe this one, but definitely this one, of course. So yeah, that's a great example of a reversal candlestick pattern. But this one too, really. Strong candle, candle clear, candle close near low. More or less saying that this momentum is over. All right, folks, thanks for joining this webinar. We're going to wrap it up, I guess, then. We are going to look at the same topics next week, but hopefully I'll see you tomorrow with this particular topic. We're going to take a look at price movements and trends of the markets, second part 2017. So looking forward to that, specifically after the euro dollar broke. I think that's going to be a very interesting development. We're going to dive into all the details of that in tomorrow. So hope to see you then. Otherwise, maybe next week, and wish you all great trading. Cheers.